Let's dive into the topic of crisis versus crypto today. How does the market play out with all of what's happening in the Middle East? I'll break it down. My name is Paul Barron. Welcome back into Tech Path. Let's get going. I do want to thank our sponsor, Coinbase. You guys can get into crypto and your first trade. Maybe you're thinking, I need to diversify my assets. So you're sitting on a lot of cash in a money market and you're thinking, I need to go into some crypto. Well, this is the place you can do it. All you have to do is grab your Bitcoin, your Ethereum, get in there, make a trade. Use our link down below. You'll get up to $200 in crypto to get started. And you guys can begin your process. Let's get into a lot of the news today, which, as we all know, front and center is what's going on with Israel and Iran. Trump now says he wants a real end to the nuclear problem with the Iranians. And of course, Israel wants Khamenei, which is essentially the leadership. And you look at a few points within this. Trump said his departure of the G7 summit, because he kind of left, says nothing to do, but he's working on a deal with Israel and Iran. Maybe there's a deal that is in the works, I hope. Something much bigger than was expected. So he also is posturing. Remember how Trump negotiates. He always puts out these bombastic statements and these very lofty goals, and then he retraces back down to a deal that's actually tolerable or more doable. This is where I think he might be going with the Iranian deal, if there is one brewing. Now, I want to go to this first clip because this is him talking about that in terms of a ceasefire. Take a look.
What specifically is better than a ceasefire? What are you looking for here?
An end, a real end, not a ceasefire. An end.
So something that would be permanent.
Yeah, or giving up entirely.
The big question at this point, of course, guys, is whether the U.S. will join in with the Israelis' attacks against Iran or whether they'll be continuing to push for a negotiated solution. The president posted on Truth Social several times about Iran overnight, but most recently saying that Iran has not reached out for peace talks in any way and that if they want to negotiate, they know where to find him. He also told reporters on that plane that he was not quite in the mood to negotiate with Iran. So all of that in play today. We do expect the president to be weighing those options from the Situation Room throughout the morning. A U.S. official told NBC News late last night that the president had asked for his national security team to be ready and prepared in the Situation Room when he got back.
All right, so as you can see, there is a lot happening right now in D.C. Trump, of course, on Truth Social, going right at it in terms of an unconditional surrender. That's kind of the play. And a lot of this is going to boil down to how does the Middle East survive this in the sense of economic, but also in the element of reducing the tensions right now, because I think that's the biggest issue globally that we're facing. And when you think about leaving the G7, because this is a very important meeting that will set the course on a lot of these trade deals, even though we have some of them that are really kind of just a reprint of what they've been talking about. But the point is that this is taking precedence. And I think that is the thing you have to pay attention to in these markets. Go to this clip right quick, because this one will get into leaving the G7 early. Take a look.
Just looking over the course of the day, there was a lot of conversation about a path forward with Israel and Iran. There was an effort by the leaders of the G7, absent the U.S., to kind of come to some sort of unified agreement to tell those two countries to de-escalate, to stress the importance of doing that. President Trump did not want to be part of that agreement and had the opportunity to talk a bit about why he thought that's the case. He began to push once again for there being a diplomatic solution, said that Iran is effectively at the table because it has no other options. It just raises a series of questions. Does that signal that the U.S. is bound to get more involved in this conflict? And President Trump and his administration so far have taken a back seat, said they didn't want to get involved. Are things going to change? Or is he going to have some sort of hand here in trying to broker a temporary peace or a ceasefire in this crisis?
Hopefully that is the case, as this takes precedence over G7 and getting in alignment with what's going on with the Iranians. Now, you got to look at where the tariff situation is set up right now, because this is important as well in terms of the economic side of things. He did just try or hopefully sign a deal with the U.S.-UK trade deal. This is after years of trying to get it done. I don't know that this is necessarily a big change from what we've seen come out of the UK discussions in the past, but he is going after beef, ethanol, and aerospace, and maybe we get some new entries into the markets that we have not been expecting. That would be a good thing. The other thing that comes from this is that we're going to see a little bit of a domino effect. This, of course, is the European Union saying that trade talks with the U.S. are now advancing. And remember, the U.S. And the EU have been in odds with each other for quite some time. This is, I think, a bigger statement going forward. And if we can get something really hooked up with the EU, I think that would, again, be very positive for the markets in general. And then Germany comes in saying that we're going to have something by end of year. This is all very good, especially coming out of Europe and also coming at a time in which tensions in the Middle East are rising, and we need to solidify what's happening in the global markets so that hopefully this administration can really focus in on what's going on right now. And I want to go in on a couple of things because there are some key issues that are spelling out within the markets. And everybody knows tomorrow's the FOMC. Wall Street analysts are now saying, hey, next interest rate move could happen. And there's a few points that I want to get at. The May CPI came in a little bit softer. That was a good sign, and that's a very bullish sign. Central bank not only has a factor to implications of Trump's tariff policy, but now they're dealing with this Middle East escalation. I agree with that. They've got a lot more on their mind. And you've got to look at the jobs report. That's going to be coming out as well. Now, does Jerome Powell get into more of an aggressive hold? That is the question that will be answered tomorrow in the FOMC meeting. Mainly this will come, I think, after the meeting itself, and we'll get it in the press conference, and it will give us a little bit of an insight on how this could turn out in terms of rate cuts. Global central banks are cutting rates, though. That is a big deal. What we're seeing right now with world central banks, interest rate cuts 15 times in May, fastest month pace of the year. You look at this right here. This is a chart of the central banks cut at fastest pace in 2025. You can see the acceleration, 15 cuts. That's pretty big, you know, when you look at what the rest of the world is trying to do, and not necessarily in a good position, I think, in many cases to do it. One thing to note on this chart is it goes back to some of the key points in history. December of 2008, we understand the financial crisis. This came out of the savings and loan debacle. A lot of that led up through a run in 2007. I know a lot of the triggers were there, much like what we're seeing even right now. And obviously we know what happened in March of 2020. And then you look at September of last year, and then we rallied. And then, of course, that was again a cut in September of last year. And now, could we get another cut in the fall of this year and see a rally? If we do, the rally could either spark something much longer, or it could get you in a position where you might want to take a look at where your market position is long term. Meaning, do you start feathering out of the market? That's a real question I think a lot of people are trying to time, and it's very difficult to do so, but it could be the thing to watch for sure. Let me go over to this Bloomberg clip because this is going to get into something that I think is very important, and that is U.S. Treasuries. And most of that is being held and really magnified by what's happening in Asia. Take a look.
It's $7.5 trillion worth of U.S. investments by Asian investors that's been building for the last couple of decades. And so that is what is at stake. What I have been reporting on, and my colleagues have been reporting on, talking to life insurers, pension funds, head of trading desks, is that there is a sense that we are at a pivotal moment in history where this Titanic is finally turning. People are actively questioning, should we have that much?
Maybe it's not really about de-dollarization. This story today, this week, last week, is really just about concerns around sustainability of government debt.
It's not purely a US-centric story, although Trump's policies on trade in particular and rewiring the US economy is obviously exacerbating and augmenting the risks here. But definitely there is a soul-searching among rates traders. And, the term that we all know, bond vigilantes, are they actually gaining in power when all these dynamics are in play?
All right, so a couple of points with that is what you're looking at coming out of Japan, but mostly Asia. $7.5 trillion. Yes, that's a big deal because it can make up a compensation point around U.S. Treasuries. Now, the likelihood is that you wouldn't see a total exit. So let's assume at worst case, maybe a 50% exit on the market. Now you have a lineup coming in on stablecoins, which of course use U.S. Treasuries as a base. That all plays into what we're seeing right here, and that is the U.S. Senate who votes today at 4:30 on the Genius Act. This is a landmark stablecoin bill. It will affect everything. And I think when you look at one-to-one cash T-bill reserves as the core, this means that we could see the US dollar opened up to the world in a very easy way, meaning through crypto, through blockchain. All of that could help soften the blow if Asia does start to step away. And if you look at the debt on what we're seeing right here is Wall Street Mav. This is U.S. national debt continuing to climb. And this is the thing that I think everybody is concerned about. This is the de-dollarization. This, I think, will get into the concept of where stablecoins could be going. And that is the bullish side of what's going on right now. Though, yes, there's a conflict in the Middle East. Yes, we have some, real conditions around what that may resolve to. But long term, the potential is real around digital assets. And I think what we're going to see today coming out of the Genius Act with the passage of this stablecoin bill will start to shift things big. Now, here's a clip from CNBC on stablecoins and why it's so critical to the United States. Take a look.
Probably help enshrine, they would help enshrine the dollar's premier status around the globe and even help the bond market because it has to be backed with dollar-based, or if it's a dollar-based stablecoin. It needs to be backed with bonds.
Now I think you're seeing how powerful stablecoins are. To your point, the way to think about a stablecoin is it's somewhere between the way it's being proposed right now, a money market fund and a savings account or checking account at a bank, but it's so much more powerful. Think about you having to send a Venmo, a Zelle, a PayPal to a swim instructor for your children or pay your friend for some event. Today, you have to use an intermediary who holds that money and makes interest on it. I see a world where eventually stablecoins will be the main transaction mechanism for all payments flowing through the global economy. And I think it's a huge innovation. What we're seeing today, hopefully the Genius Act will be voted on in Congress and passed, and that will lay the foundation for more regulated stablecoins. Right now, stablecoins is a $250 billion industry. Tether and Circle have about 90% of that. But I wouldn't be surprised if over the next 12 months, you see many more players entering the space because of how critical this is going to be to payments and financial infrastructure.
I think that we are going to see, and this would be my prediction, we're going to see a faster move on stablecoin accommodation. And I think there's a couple of reasons. Obviously, what we're seeing on the pressure on U.S. Treasuries. But I think we're also seeing at the same time the issue of what may be a true shift in global e-commerce. What I mean by that is the moves of Stripe, the moves of PayPal, the moves of what we'll see on many companies, including retailers like Shopify. I think it's also likely that we'll see all the social platforms potentially moving in, if not also shoring up stablecoins within these platforms that will be backed by U.S. Treasuries. That is all very positive, and going forward, it's going to become, I think, a bit of a race. So I agree that, yes, we're going to see a big run-up. I don't know that it's going to be a gradual one. I think it might be an all-at-once thing. I mean, we've seen this in tech before. Mobile, social, a lot of what we're seeing now in the, at least the markers of what's happening in crypto, remind me a lot of those times. And in those eras, the market exploded. So a 2 trillion to a 3 trillion, I think actually might be an underscore. We could see anywhere between 4 to 10 trillion. That would be unbelievable. Big news happening right now around the Ripple cases. And of course, the Ripple and the SEC want appeals to pause. This is a little bit of the breakthrough ruling that will be coming, and I think this is a big issue right now because XRP has been suppressed for quite some time. Could we see Q3 as the final relief rally? Now, one thing that is breaking right now is that XRP and the SEC, I should say the SEC, is now calling for public comments on the XRP ETF. Maybe, and remember that Solana just today also got delayed with their ETF. So the potential here, maybe XRP is going to be the first one out of the gate. Could be something brewing there. Make sure and stay tuned right here. If you guys are not subscribed to the channel, by the way, do that right now. Take a moment because we do get into a lot of these details. We will have a big show tomorrow on not only what's happening with the Genius Act, but because I think we're going to have a stablecoin that's legal in the United States tomorrow morning, and what's going to be happening with FOMC and obviously Chair Powell. So make sure and hit that bell because that way it'll give you notifications when we go live. 7.4 trillion now sitting in money market funds. He kind of mentioned that in that last clip. That's a big deal. It's all-time high. But imagine 7.4 trillion now competing with stable coins that could maybe get better or equivalent rewards. Because I know a lot of banks right now that, and even neobanks that are paying sub 4%. Most of the crypto, as you guys know, crypto platforms out there paying right now over 4%. Likelihood is we're going to see those kind of deals coming in on stablecoins from a lot more places, And that, I think, is going to start to drain a little bit of the money market because, hey, listen, half a point, when you get into these kind of numbers, 7.4 trillion, that is a lot of earnings. And that is good, I think, for U.S. Treasuries as a whole. Tech stocks also, when you look at M2 money supply, this is something kind of interesting because I was a young engineer back around that time right there, and I remember the run-up that we had in the dot-bomb era. Now, what I mean by that is there were so many new companies launching, just boom, boom, boom. The market was absolutely exploding, and then we saw a $7.5 trillion retracement, and that was when we saw the explosion of what was the dot-bomb. That went all the way into 2002 before we really saw a movement. Actually, it was around 2003 before we started seeing a movement going up. And that, of course, led us right into the financial crisis, which was right here. That's 2008. This has been the run-up, though, right here. Outside of, let's just forget the pandemic for a moment, but had that not been there, that big, really shift of wealth was a huge one. Now, will we see another blow off top? I think yes. The opportunity is there. There's enough going on in the crypto market that this could occur, but be very cautious on this next move up because this may be the one that sets us up either for a infinite up or it could see the retracement of a major market move. Other things you got to look at is the Coinbase is seeking now SEC approval to offer blockchain-based assets. This, I think, will just continue to grow the market, especially around tokenized securities. And it may shore up positions for Coinbase because they have been lacking in being able to grow their base outside of just, tokens. So the ability to maybe go in and actually buy S&P 500 over there is a huge opportunity for where Coinbase is going. And it will be the thing that they have to compete with the likes of Robinhood, who I think is coming up very, very fast. ETH, of course, many people are now pushing this narrative right here, and that it's a mispriced digital oil that could hit 80 grand. That's not a misprint, guys. It was 80 grand. Now, I don't know if you guys believe that ETH is an $80,000 asset trading right now at around 2,400. You let me know, because that would be unbelievable if we see a mispriced structure of what's happening in the ETH ecosystem. Drop some comments down below. Always love to get your feedback. Be on the lookout. Right now, we're looking at just the hourly here on Bitcoin. And guys, this just does not look right. Does it to you? So are you holding through these kind of turmoil issues, or are you playing these and buying these dips? This is a thing that I think a lot of people, if you're watching our channel, hopefully you're buying dips and getting into markets, because remember, a lot of times when there's fear in the streets, that's when your opportunities are made. If you're not part of the Diamond Circle, get in right now. It's a great place to get additional content. And of course, follow me on X @Paul Barron. We'll catch you next time right here on TechPath.